now as Amazon's evolving, having won the commerce pillar, they're moving on to their next flywheel. And that's opening up much bigger opportunities. So they're using commerce as that kickoff point, but the next flywheel is predicated on media, advertising, and commerce.
Welcome to eCommerce Deep Dive, the show where we explore e-commerce business strategies and the future of shopping online. Your host is John Ghiorso, founder and CEO of Orca Pacific, a complete Amazon marketing services company. Every week, John talks shop with the biggest players in retail and e-commerce. For today's episode, John is joined by Andrew Lipsman, the Principal Analyst at eMarketer. He and John discuss Amazon growth trends through Q4 and give their predictions on how Alexa will impact consumer behavior in 2021 and beyond. Thanks for listening. Enjoy the show.
Welcome, everybody, to another episode of eCommerce Deep Dive. I'm here with Andrew Lipsman. Andrew, it's great to have you on the show. Maybe just to start out, a little bit about you, your background, and what you're up to at eMarketer would be great.
Yeah, thanks for having me, John. So I am eMarketer's Principal Analyst covering retail and e-commerce. I've been there about 3 years now. Prior to that, I spent a dozen years at comScore, where I covered all sorts of different digital trends. I really ran the gamut. But really the first week that I started there was the week that it was November of 2005, which happens to be the week that Cyber Monday became a thing. So that was my introduction to the world of digital. And then over the next dozen years, I covered the holiday e-commerce season in depth, but also just e-commerce in general over the course of that, alongside the rise of digital video and digital advertising and the rise of mobile and all those other digital trends that nicely intersect with e-commerce.
Yeah, absolutely. And then, so what do you do today at eMarketer? What's your kind of day-to-day? What are you focused on?
Anything interesting in the world of retail and e-commerce as it pertains to marketing. So it is the intersection of all these trends that I just mentioned. I like to joke that half of my job is covering Amazon. That's probably only a slight exaggeration because Amazon is at the forefront of so many trends that others end up following. I feel like they're the focal point of everything. So if it's not 50%, it's at least 30% of what I cover.
Yeah, absolutely. Yeah. And I think, by the way, you may actually have my dream job. Like your job is like the most fun, small part of my job. So anyway, I'm jealous. So, let's get into some kind of real world stuff. It's December 15th. This has been an unprecedented Q4 in more ways than one. I think we all know the kind of the backstory. How's it looked so far in terms of the e-commerce overall performance? And I don't know if you can dive into Amazon specifically.
Yeah, so there's a lot of nuance to it. I will say it's going to be, by any historical measure, a gargantuan Q4 in terms of e-commerce, right? But we sort of knew that because the growth rates we had been running at through Q2 and then Q3, which had been well north of 35%. Over the course of the year, that was kind of the baseline expectation heading into Q4. Broadly speaking, I think we're going to be in that ballpark. So it's really strong. At the same time, I think we're also seeing some signs of it not being quite as strong as I had anticipated. So there might be a little bit of underperformance. If anybody's paying close attention to the Adobe numbers as they come in, I think that's kind of the best data source that's doing kind of real-time, daily analysis of e-commerce trends. They had to downgrade their forecast for the season by, I think, $5 billion. So there is some evidence that maybe things aren't quite as strong as the season began. And a lot of that really focuses around the Cyber 5 period. So
we've seen some of the same thing around the Turkey 5 or Cyber 5 or whatever we're calling it. Is this a Prime Day impact from basically pulling those sales forward, or is it an overall sort of softness versus very, very bullish expectations in Q4 as a kind of total season?
So I've been looking at, that's the question, the fundamental question I've been asking myself over the last few weeks. And I've been asking lots of folks for some additional data so that I could unpack it a bit more. And I think the answer is going to end up being a little from column A and a little from column B.
Okay.
So there absolutely is evidence, pretty strong evidence of a pull forward effect. We know that people were doing some early holiday season buying around Prime Day. We also know that growth rates in the early part of November were running pretty hot, in maybe the 40% range, which is especially interesting because you had the election in the early part where you kind of get this a couple day hangover effect where some people are depressed and they just don't spend for a couple of days. So even with that, we were actually running pretty hot in the first 3 weeks of November. Then we got into the week of Thanksgiving, and the growth rates over those few days leading up to it, Monday, Tuesday, Wednesday, were all really strong in the 50 to 70% range year over year. A lot of excitement building up. You get to Thanksgiving Day. We were actually predicting just under 50% growth for that day because stores were closed. We thought it was all going to funnel online and be this huge couch commerce day. And boom, it's like a 20 or low 20% growth rate. Black Friday comes along. Same thing, low 20s. Then we hit Cyber Monday, and that day is in the teens. So those 3 days, we were expecting them all to be north of 35%, all the way up to 50%, and all of them were about half that overall. So definitely underperformed on those days. So then the question becomes, what happened? I think part of the evidence is that it got pulled forward specifically earlier into that week, those first 3 days of the week. But I'm also beginning to see some signs, mounting signs that maybe consumer spending patterns are drying up a bit. We know that we failed to get additional government stimulus spending, which, as we saw back in April and May, caused this huge surge in e-commerce activity. So without that, people maybe had to pull back. And we don't really know what's going to happen here. You've got unemployment benefits running out. So there's just a lot less cash swimming around at the moment than maybe our expectations had suggested in the early part of the season.
Yeah, that's super interesting. So that kind of aligns with what we've seen on the Amazon platform. And I will tell you, just the impact of the stimulus on consumer spending from our perspective was absolutely massive. I mean, there's obviously a huge portion of the country that just really sees that as a windfall and goes out and spends it immediately on whatever they've kind of been wanting to purchase from a discretionary standpoint. So with that drying up, that's interesting. Does it have anything to do, and I don't know if you track this, with overall ASPs, so just retails out in the marketplace? Have you seen inflation there in general? And it's a related question, but percentage off, have you seen brands be less willing to do those kind of deep discounts to drive that incremental traffic?
I'm curious to hear what you're seeing in your platform. I'm seeing a range of activities. So I think some retail brands that are in a stronger position are holding the line on discounts. They don't feel as much need. So they're in a bit of a power position and they're retaining margin. I think you also have a lot of retailers, specifically in apparel, right? They're still sitting on this mother load of inventories and they need to discount really heavily if they want to get rid of it. At the same time, if you think about it, it undercuts their full priced items are the ones where they should get margin this season because they're competing with themselves. So they're cannibalizing. It's a tough spot to be in. I don't know what the right answer is there. And then, maybe some evidence of some slightly deeper discounting overall, and brands kind of in the middle. But I think that overall discount has been driven by the fact that they are having those Black Friday discounts so much earlier in the season.
Yeah, interesting. So, where do you see Q4 lining up in aggregate then? If you were to guess, I know we still have a couple weeks left here, but do you think it all kind of evens out in the end, even with these day over day kind of shifts, or do you think it actually just looks soft in aggregate versus forecast?
So I think it's going to be good, not great, and it depends. Okay. Overall, if we're talking about e-commerce and brick and mortar, I think brick and mortar is going to be at a bit tougher spot. So we were predicting for the holiday season that overall retail spending would be up about 1 percentage point. because e-commerce was going to completely make up for the shortfall at brick and mortar. Brick and mortar may end up being a bit worse than we expected. E-commerce, slightly worse, but still pretty strong. I think we're still going to be well,
Sure.
north of 30% for the season. It's going to be the biggest quarter ever for e-commerce by a long shot. Some of the biggest spending days in history. So good, not great.
Yeah. Okay. No, that's a good summary. I appreciate it. So maybe pivoting here to the Amazon Flywheel. I know you have some thoughts here. I'm curious to hear them. It's a term and a concept that gets thrown out a lot. I think it's oftentimes misunderstood, frankly, by the industry. So what are your thoughts?
Yeah, well, so we're all at this point pretty familiar with the back of the napkin sketch. And I guess the basic premise of the flywheel was, and Bezos has often said, he focuses on the things that don't change over time. And so consumers always want the best price, selection, convenience, right? So those are the three pillars of commerce. And Amazon really started off when they were just a bookstore, an online bookstore. Selection was kind of that first dimension that kicked off their flywheel. Very quickly, I think they moved into price. So the next era was kind of about driving prices down. And by the way, all of these elements are overlapping at various times. But if you think about it in terms of shifting focus, so price came next. And then now we're kind of more in the convenience era where you think it's all about how fast they're getting products to you and the customer experience that they're delivering. So they use that to lock down the commerce pillar, right? So that was the flywheel in effect. And I think now as Amazon's evolving, having won the commerce pillar, they're moving on to their next flywheel. And that's opening up much bigger opportunities. So they're using commerce as that kickoff point, but the next flywheel is predicated on media, advertising, and commerce. So what I think is interesting about this is that if you had asked between Amazon, Facebook, and Google, who would be the first of those to really lock down the three pillars of media, advertising, and commerce in digital? Almost everybody would have said Google or Facebook, right? Both of them obviously have the duopoly in advertising. They both have major media assets. Obviously, Facebook's got Instagram and Facebook proper. And then Google has YouTube, some other things obviously as well. But they were always light on commerce. Amazon had commerce, didn't really have advertising or media to speak of until the last few years. And they've developed their capabilities in media with Prime Video is obviously the crown jewel. They've got Twitch, and Alexa really is kind of the next media platform, if you think about it. Advertising, we all now know Amazon's got a really formidable ad business that's growing strongly. It's a strong number 3, but still pretty far behind Facebook and Google. And then the commerce piece is unquestioned. So in some sense, Amazon really kind of won the race to lock down a strong position on all three pillars in that. And what I say with this new flywheel is that Prime membership really, if you think about it, is the fulcrum on which Amazon's new flywheel spins, right? Because all these things intersect through Prime membership, and it reinforces that. Prime Day then is like Amazon's chance to get an extra spin of the flywheel every year. And so it helps that flywheel pick up momentum and increase their dominance.
Yeah, that makes a lot of sense. And I think my opinion on the Prime membership is we've really just seen the beginning of the value that Amazon is able to provide with that membership. I mean, if you think in terms of the stuff that Amazon's just starting to get into, if you start to have pharmacy benefits with a Prime membership, if you start to have, other healthcare benefits, if you start to have, if they ever get into other kind of consumer services, you can all tie that back to that Prime membership, and you have this baked in massive loyal customer base that you can just keep kind of monetizing. It's actually, Amazon came up with the Prime membership based on Costco's membership. I mean, that's been reported, right? Like that was their kind of, that was Bezos' motivation. Costco's actually extended it, arguably, I wouldn't say further, but they've extended it in some different ways. You've, gas benefits, you have pharmacy benefits, et cetera. I think that Amazon will far kind of expand beyond what Costco's done with their Costco membership. But I mean, there's dozens of different things you could build in there.
Yeah. Well,
Yeah, go ahead.
so if you think about Prime Day, right, it's really a membership drive for Prime. So it brings more people into the fold with Prime, first and foremost. But on that commerce piece, what does it do? It actually is an entry point into more categories. So as you said, healthcare is kind of the next big one out there. I would argue right now the center of gravity is shifting to CPG and grocery as the next big category. But also it introduces you to a bunch of Amazon products, primarily consumer electronics, the Fire TV, and Echo devices. So then on the ads business, right? If you are a seller, you need to start acclimating to the ads business and buying ads into Prime Day if you want to drive sales and sales velocity. By the way, that's only become more critical now as Amazon pushed Prime Day right up into the holiday season. Nobody really wants to risk not getting sales velocity in advance of the holiday season. And then, from a media standpoint, it's Prime Video. So that's the second most important benefit within Prime after fast and free delivery. And then all these Alexa devices now that Amazon is just pushing into your home. So all these things become self-reinforcing. And it's really creating this very profound flywheel, I think, very quickly. And people don't even see how much bigger it's going to get. The ads business in particular is, and maybe we'll get to that, unpack it a little bit more later in the conversation, but that's the one that I'm really focused on as something that's just about to explode over the next couple of years.
So let's go there. So, my company now is part of S4. Sir Martin Sorrell, our chairman, is a guy who makes a lot of predictions. They oftentimes come right. He looks at Amazon advertising as $100 billion business. In not like a science fiction future, but in, a handful of years. Do you agree with that kind of bullish stance on where they're headed?
100%. I actually wrote an article last year about Amazon's future in advertising, and I led the article with a quote by Sir Martin Sorrell.
Okay.
And it was all about, what keeps you up at night. This is back when he was a WPP. And It was, basically predicting that Amazon was going to build this $100 billion business. So why is that? Today, Amazon, I think, has just plucked the low-hanging fruit, which is search, right? That's easy. And it is a very tight closed loop to purchase. It's very self-reinforcing. Google proved this model out, by the way, 15 years ago. Right. So Amazon's just basically running that playbook. But what do they have in the future? They have the best purchase data for targeting. And they have all this buying activity so you can measure the impact and the ROI of those ads. And dollars follow measurement. So what's so interesting about their opportunity is they haven't really even tapped, the upper funnel opportunities. So that's display and digital video. They're moving into that with the DSP. But that's still a small percentage of their ad revenue. The big opportunity is this big old bucket of TV ad dollars, $70 billion a year. And, the inventory decreases every year and the CPMs just keep going up and up and up because those advertisers don't have anywhere else for that money to go. The second that there is inventory that can provide them that value. Oh, and by the way, supported by, digital targeting and measurement, those brand dollars are going to move very quickly. So what Amazon is doing in grocery and CPG, that's just going to fuel their ad business. That's a big part of their offline strategy in going into Amazon Go stores and in Amazon Grocery Fresh is how do we get all this purchase activity that we can use to fuel that ad targeting, which, by the way, very soon we will be delivering that in the over-the-top OTT environment, probably alongside Prime Video, but I think they'll also make some acquisitions in the TV space. And that's a complete game changer when that happens.
Yeah. And one element of the Go and some of the other, just walk out, the smart shopping carts, that technology in physical retail is that what you're able to do is mimic digital data in a physical environment, where right now, the only thing Safeway knows is when you walk out and how much stuff you bought. That's it. They don't know when you walk in. They don't know how much time you spend in the store. They don't know where you went, what you picked up, what you put down, etc. Amazon in a Go store has all that data because it's all tracked. So the power of being able to monetize that and then serve ads, I agree, where you have massive, massive amounts of consumer attention, which is still television, becomes an incredible kind of coupling at massive, massive scale. So you mentioned, this is an interesting prediction. You mentioned you think they're going to buy a studio, a channel, a media company. What are your thoughts there?
Well, so we've already seen them make some moves and overtures in the space. Obviously, they acquired rights to Premier Football and NFL football games, right? Yep. They were sniffing around buying, I think it was the Yes Network or one of these sports networks on the East Coast. A year or two ago, there were recent rumors that Bezos was considering buying CNN, which is on the market. So there's a common theme here that they're clearly looking at places where there is TV inventory. To me, that's the bottleneck right now, is they just don't have a lot of inventory. They're probably somewhat reluctant to introduce ads into Prime Video today. They could do it. I think they probably will. But if they want to remain competitive with Netflix, and I think they want to, remain as premium as possible, they're probably going to resist that as long as they can.
Hey there. I'm Dave Zimmerman with Orca Pacific. I hope you're enjoying the show. I wanted to let you know this episode is brought to you by Orca Pacific, a Mighty Hive company. We're a full-service agency exclusively focused on Amazon with capabilities for everything a brand needs to succeed on the platform. From advertising strategy, content development and SEO, to merchandising and marketing. If it relates to driving and converting demand on the platform, our dedicated teams are leaders in this space. Our robust suite of services includes expertise on the back end as well, from operational support, demand forecasting and planning, to the right fulfillment options, and higher level strategies like long-term planning, channel management, and access to beta programs. To learn more, visit our website at www.orcapac.com. That's ORCAPAC.com. And a business development manager will get you up to speed on how we can accelerate your Amazon business. Now, back to the show.
I have strong opinions on this, but I'm curious to hear yours. Where does Alexa fit into the flywheel?
Okay, so I would say I am in many ways somewhat bearish on voice. I think there's been a lot of
interesting.
There's been a fair amount of hype around certain elements of voice. And I will say this: in the long term, I think it can be transformative. But I tend to subscribe to the Bill Gates quote where he says we tend to overestimate the impact of technologies in 2 years and underestimate them in 10 years. Yeah. I see the value of voice really being more on a 10-year horizon. It's just not good enough. Amazon's has the best and it's still very clunky. And you need that really strong feedback loop to really drive consumer behavior around it. So that's why we haven't seen things like voice commerce pick up in a big way. That said, there is a future there and that's going to happen. Now, with respect to the flywheel, so here's where I think it plays into things. One of the most popular products on Prime Day is Amazon Fire TV with voice remote, right? So it's Echo products too. That's in the home, but with voice remote. So to me, that's a critical part of the TV experience. It's still horribly broken today that voice actually can do a good job of. And so I think this is Amazon's chance to habituate people to the voice behavior on a very routine basis. And then as I think about the future of advertising on Amazon and Amazon TV, think about an Amazon ad being introduced to you through whatever inventory. Let's say it's Prime Video. Amazon knows you're running out of dog food. They can deliver an ad for that dog food and say, we think you're running low on this. Do you want to order now? And you can just say right into your voice remote, order now.
Yeah, I agree with that. And I agree with your thoughts on kind of the short-term and long-term importance of voice. it's definitely, I think it's going to take a while, but I think it's probably less than 10 years out. It's probably more around 5 years out. But I also feel like we're in the, are you familiar with the Gartner hype cycle?
Yes.
What is it? The trough of
Disillusionment.
disillusionment.
Yep.
Is that what it is? I feel like that's where we are with Alexa right now, because it was super, super hyped. Brands put money in it. They built skills, and they realized people just kind of set timers and check the weather like for 2 minutes a day. They don't really use the other features. But I do think eventually, especially when it's seamlessly paired with screens, whether that's through a Fire TV experience or in your car or on your phone, whatever, I think that's when it becomes really powerful and locks in that Prime membership in a way that Amazon has never been. Because right now the Prime membership is like, I get this benefit for these things. And like, if that calculation for most consumers doesn't equal $120 a year, every year, they're not going to buy it. Now they do, there's a very high renewal rate, but if you can eventually lock a Prime membership into the personal computing platform that you use for 60% of your computing throughout the day, that's a completely different scenario. Now that's a bit science fiction, but I do think we'll get there eventually.
I do, but you're hitting on a really interesting point. So first off, with predictions, the hardest thing to always get right is the timing, because it's usually there are market enablers, and let's say there's 3 key market enablers. Those things have to come into confluence at the same time for a market to hit that inflection point. It's always hard to predict all 3 of those things, or however many enablers there are. But there's value right now in just understanding, well, what are the friction points? Voice works well for certain contexts and not others. It's not complex. It's not a true human interaction. There's only certain things that it does well. So those are the things you gravitate towards as humans. People are not used to interacting with digital environments through the ether around us. We're used to screens. So I think screens, as you're noting, are a key point, right? The voice can be extremely complementary to the screen in a way that when it's just voice on its own, it's just much harder for most humans to grapple with at this point.
Yeah, I agree. I mean, if you just think about the way like organically we're set up, we're doing things with our voice and our eyes, like, and our hands, right? Like that's how we navigate the world. So to have a computing platform that mirrors the sort of baseline way that humans interact with the world, with, we kind of receive things through our eyes, and we command things through our voice. Like, I think that is ultimately, if you can create that, you create an ability to where computing is so like baseline understandable that it becomes almost completely like just a natural extension of kind of human interaction, which I think, anyway, very science fiction, but I do think Amazon gets there eventually, and they have like 10,000 engineers working on Alexa. So it's obviously like when Bezos talks about big bets, that's a big bet for them.
And it will. And this is a case where, machine learning and artificial intelligence will continually get better. The way I think about it is, for it to become a natural behavior for most people, you need to be at a 95% sort of accuracy rate. 95% of the times that I interact, I get basically the response that I'm looking for. Yeah. What is it today? It's probably south of 50%. There's a path. So how quickly we get there is really critical.
Yeah, I agree. So let's make more predictions, maybe a little bit more grounded in the near term. What are your thoughts on next year? Anything that you expect Amazon to do that might be surprising?
Yeah, well, so we already hit on one of them with making some sort of acquisition to open up TV inventory or TV-like inventory. And I'll unpack that a little bit and give you my rationale. So antitrust is what's swirling over everything. And so Scott Galloway has made a prediction a number of times where he says that he thinks Amazon is smart, and they're going to get out in front of antitrust action and basically spin out AWS. I can see that happening. I don't know if that happens next year or in a few years, but the key thing there is this is their profit generator and their source of asymmetric competition. So if AWS is out of the picture and being able to fuel that advantage for Amazon, what takes its place? It's the ad business. It has that same very attractive margin profile. It needs to catch up on scale. So catching up on scale to me is about unlocking that TV opportunity. So I think that becomes a big focus of how do they get that ad business to the next level of scale over the next year or two.
That's interesting.
So that's kind of prediction number one. The other one is I see a huge megatrend happening with digital fitness. I think this was the pieces were already coming into place over the last year or so, and then the pandemic really magnified the effects. And as I see the space developing, you have 4 key power players today, which are Nike, Lululemon, Peloton, and Apple. What do all these have? They're prestige aspirational brands. They're bringing fitness into the home through a media experience in some way. They probably got some health tracking. They've got high margin products. It helps create recurring revenue streams. It helps them sell, their hardware or apparel products. So there's a lot of commonalities between those 4 players. Amazon right now, I think, is a little bit on the outside looking in, but they could certainly become a key player. I've got my Halo Band.
Oh, you got one.
How
is it?
It's, I will say it's not to the same level of quality as an Apple product. So there's a few little glitchy things, but I will say the capabilities are pretty novel and well done. So I see a lot of potential with it at the same time.
Yeah.
So that to me is a key foray into the wearable piece. By the way, one of the features of this is that it can measure the tone of your voice, right? So that's kind of an interesting little Trojan horse to be able to get access to a lot more spoken word to help train their algorithms for Alexa. So the second piece, though, I think is everybody else has an entry point into the home through a screen. And for Amazon, they don't have that, but they did make an investment in tonal. Right. So Lululemon bought Mirror this year. I thought that was maybe the most inspired acquisition that I've seen in some years. Amazon was part of a big round in tonal. And I feel like that's about getting close to a company that they're maybe looking to acquire. And when you
and just Andrew, just for context for our audience, so tonal is I think people are more familiar with Mirror. Yeah. Tonal is a very similar looking product, right? It's basically a mirror that you stare into with smart features that has a screen on it. Yes. You work out in front of it.
Yes, and this one is a little bit different than Mirror because the other ones are more on sort of cardio type of activities or some of those exercises, whereas this has resistance training built in, but same basic premise that it is a media-enabled screen to provide an in-home fitness experience. So if Amazon were to add that piece to this wearable piece, and obviously they're introducing some other wearables like earbuds and things of that nature, you start to put all those pieces together, and I think Amazon can introduce a very compelling digital fitness experience.
Yeah, that's really interesting. I also think, long term, the biggest issue with Alexa, sort of the future state that we talked about, is they're not going to be able to make this work on an iPhone or a Samsung device because they won't let it. And so one of the primary screens you use is going to be sort of blocked from that experience. And I don't know what the answer to that is, but having 7 other screens in your house, one of which is a piece of fitness equipment, I think gets them closer.
And having another piece on your person.
Yeah, exactly. Yeah, if you can triangulate all these things, it doesn't work on my phone, but it works everywhere else. And I have this device that at least I can connect via voice to. So that makes a lot of sense. What else?
Oh, there's so many things. I think so fitness to me, that's a big opportunity in and of itself, but it's really about a much bigger opportunity, which is healthcare, right? So it broadens the lens quite a bit. But everything they've done in the last few years with PillPack, and obviously where they seem to be going in the next couple of years in terms of how they administer healthcare two people, maybe, at their home. I just think, and by the way, if you want to continue to grow as Amazon, you need to start picking off much bigger categories. So CPG is the most immediate one in their future, but healthcare is this big one out there, which, by the way, in some sense, Amazon can do an incredibly good job because they're so good at optimizing around inefficiencies. I think that's kind of a core competency of theirs. And I don't know if there is a more sort of bureaucratic and inefficient system out there than how healthcare is administered today.
Yeah, I mean, one of my sort of big macro predictions is that over the next 5 years, you're going to see Amazon taking serious shots at heavily regulated industries because they're now big enough and resourced enough. And listen, there's a reason that their HQ2 is outside of DC. I think Amazon spends more lobbying dollars than any other company in the country. So, they have to do that to break through these heavily regulated industries. But, pharmacy, alcohol, automotive, like these are all industries that are just have all these sort of, legacy walls up through regulation that Amazon is probably one of the few companies who can actually have the sort of the power and the long-term view to break through those, to hopefully improve, the customer experience and make all of our lives better. But
yeah, no doubt about it. And you can almost imagine them just going down the line across all these businesses. One we haven't even mentioned, by the way, is financial services. They're obviously well capitalized and they're integrated into the payment space. I mean, you could see Amazon with the information they have getting into insurance, all sorts of things. So I don't think those are maybe, the most near-term things, but you can certainly see all of these things manifesting. It also explains, by the way, why New York was an important place for HQ2. To me, that was about advertising, being at the center of advertising for their near-term opportunities, and maybe financial services as another strategic place.
Yeah, that's interesting. I completely agree. Andrew, I know we could do this forever. This has been great. I'd love to have you back on maybe after we wrap up Q4 and get the kind of the once all the data's in view on it. But until then, how do people follow you? How do they find out about what you're up to? How do they learn more about eMarketer? Anything you want to kind of throw out there?
I'm mostly on LinkedIn. That's where I'm sharing most of my content. I do a podcast on Behind the Numbers for eMarketer. All of our analysts participate. I do probably 1 or 2 podcasts a week there. And then Twitter at Lipsman. But I will say I'm less active than I should be. I'm much more of a consumer than a tweeter.
Yeah, that goes for me too. Hey, this has been great, Andrew. I appreciate it.
Thanks for having me, John.